you not make $1 billion today, Sebastian? That's all, I just want to know, Sebastian. If you knew where the market was going to go, why did you not make $1 billion today?
Good morning and welcome to another Full Transparency Trading, where I'm your host Sebastian, and we are over here on the My Funded Futures funded account. Let's go over to my dash for just a second. All right, so to start our day, we were at $2,618.56. We are currently sitting at $3,308.52. Our trade went off finally at 4 o'clock in the morning. I was asleep. I just woke up at about 5:55 because my phone died. Normally I would have been up at 4 o'clock, but my phone died in the middle of the night. So I set this trade up, watching all of the movement, trying to figure out, hey, where is the actual next strongest pullback? Because as you can see, we kept stair stepping up, hit a certain point and pull back, stair step up some more, hit a certain point and pull back, stair step up some more, hit a strong point and pull back. And I said to myself, when is the next time and the next highest level that we're going to have a very strong pullback to cover the full area? And I decided, based off of some earlier data, that it was going to be here at 21,950. So to protect myself and to make sure that I got into the trade, I put my trade at 21,949. Guess where the market came to before it rejected? It came to 21,949.50. So 50 cents is as negative as this trade got. Started running down immediately, covering this area, that area, exiting finally at 21,896, which is right here at this white line that we're actually this red line that we're currently at, just past it. So I get out right here. So from there to here, we made $689. So basically we made $700 off of that trade minus the fees. And then of course it ran down about another $300 or $400 beyond that point. And I'm sorry, no, that's almost half right there. So this would put us at like $1,200 how we came here. As per usual, whenever you see a double line on my screen, it's like a small area of supply or demand. This would have been a demand. We tapped the demand zone and immediately it sends us north, pull back one more time, and then we're all the way up here. So I could have taken a trade off of this line as well, based off of the earlier stuff that we saw on the left hand side and the fact that it was right here at about 60. So I would have put my trade at about 21,860. It would have came down to 21,859. I would have got into it just the same. Now, how do I know this? Is because these things happen very often in the stock market. We're currently sitting at $594 and we closed at $597. So we're at almost at support for almost at the demand zone for SPY as well to go back up for the rest of the day. So we're about a full $11 off of the high that we've put back to, and we're starting to trend back up towards the close of the day. I don't know if we'll reach the close of the day before the market opens, but I'm thinking 8:30 is going to have a strong thing to do with that. If we do reach that 597 again, I would love to get back in here at 8:30 and get like another, $500-$600, $1,000 out of the day. That would be dope. Oh, let's take a quick look at our other account. We made $631 on this one as well, and that came from trading earlier in the evening. We took a few trades earlier in the evening for like $200 a pop to make our 631 here. But this is a single trade that I set up overnight, and that's the beauty of what's going on with my trading right now. Is now that I have a firm understanding of like the levels that we're trying to hit, I can set trades, go to sleep, go on about my day, and I'll hit a trade, it'll go well, and then it'll exit out. And I always choose a reasonable level of take profit. So in this case, I chose for my take profit to be in this white line here, where we kept hitting and hitting and hitting and hitting and hitting. And the reason that I chose to go from the top side down instead of the bottom side up is because, as you can see, the bottom side was inconsistent and we weren't getting all the way down here where we needed to every time. And sometimes when we got there, we wicked it out. I didn't want to be part of a wick, and I didn't want to have to risk a lot more than I wanted to. So I only risked $150 right here, which puts me at 57 if I'm wrong. And if we get the 57, that means that we're going to 60 and it's just running higher. So I would have been wrong either way. And that's how I do a lot of my trades. I set them up so that if I'm wrong, it only costs me a little bit to be so. But when I'm correct, I'm going to get my full play with very little resistance from the market itself, right? And as you see, we flowed straight down over the course of the next, we got in at 413 and we exited at 440. So over the course of the next 27 minutes, just a smooth flow to my take profit, as well as the 5 minutes 200 EMA and wicking it out. Could have put our trade down here at the 200 EMA, but like I said, didn't know for sure where it was going to go to, so we just chose an area that was acting as support throughout the day, and it acted as support for like hours and hours and hours throughout the day as well. We've been consolidating within a range for a little while now, and eventually we're looking to break out of this range, but we are in a downtrend overall, and they're trying to move the market back up on this Friday. So let's see if we can get ourselves back up to fill this gap down and see what the market has in store for us through Friday. But listen, you guys have a great day. As always, we are currently downtrending, so understand that we're going to gap down, hit this area of support, maybe even go down to 590, because filling 590 will allow us to fill the gap from over here. We've currently filled the entire gap from, what day was this? Thursday the 5th. So we filled all the gaps now. So now that all the gaps have been filled, well, I guess 592 is where it needs to go to in order to fully fill this gap. Once this 592 is filled, which will probably happen if the market starts on a downtrend shooting down, we'll probably get down to the 592 right here, then that'll send us back up and let us get back on our regular trajectory. What happens is you get these massive gaps, and these massive gaps up and down have to be filled in order for the market to correct itself and in order for the market to continue in its current direction. So we've almost filled the gap. We got about another $2. Once we hit that $2 mark, we can go on back up. So that's my early morning analysis, that we are going to, of course, start with the gap down, which is going to push us a little bit lower, filling that gap, and then allow us to hit this area right here, this 592.99, and start the trend and the work back up on this Friday. Now, if they do decide to sell off, I'll show you a goal that they would have if they were just going to sell off. It would be right here on the 1 hours 200 EMA, 589.36, which is just an extra $1 down, so I don't see why they wouldn't be able to do that. If we started off kicking down to the 592, I don't see why we wouldn't be able to fill this little gap to the 1 hour 200 EMA and then send it up. That would be a whole $15 off of the high, and then taking us back to it. The highest high, of course, is 613. That's what we need to break in order to get to the 620s. And as you can tell, they're clearly trending in a direction of trying to break the highest high that we've had, which is 613. As you can see, I have nothing beyond this point of 612.93. So once we get up in here, it'll be a whole nother ball game. But for the time being, we're kind of juggling this $590 to $605. Let's see if we can break out this weekend. Before the weekend. You guys have a great day. Thank you so much for checking out the video, and I'll see you in the next one. This has been another Full Transparency Trading, where I'm your host, Sebastian, and I'm out.